Well, let's focus on the metal space. That's seeing some selling pressure yesterday. Trump announced some tariffs on copper, 50% on that. Quarter one updates as well have started coming in. Let's discuss what's the call on metals. Rakesh Arora, founder at Go India Stocks, joins in on the show. Hi, Rakesh. Good morning. Good to see you. Let's start off with Mr. Anil Agarwal's stock, Vedanta. You have seen it for the last couple of decades, from I recall chatting with you about it more than 10 years ago. But what's the current stance on it? Viceroy's report is going, hard out at Vedanta. Vedanta says this is totally malicious reports. The timing of the report as well is the problem. What's your take?
So, Nigel, the playbook for these short sellers is very clear. Find companies with, shades of gray and who have high leverage. Unfortunately for Viceroy, they are just 2 years late on this stock. Vedanta Resources already delivered quite a bit from around $9-10 billion to around $4.5-5 billion now. And now servicing that debt is not a challenge at all. Number two is that, Vedanta itself has gone through this whole exercise of demerging, and all the lenders have looked at individual entities on their leverage, on the, whatever the liabilities are. And clearly, they've approved this. So clearly, all the entities are self-sufficient. Otherwise, this kind of approval cannot come from lenders. So I think, the report raises some issues which were kind of well known, but the boat has already sailed and there's nothing left here to really, gain from short selling.
All right. In fact, when the co-founder of Viceroy joined us earlier today, that's what I had mentioned to him as well. Maybe 2 or 3 years back, this report would hold some ground. But actually going by the action we have seen on Vedanta Limited in terms of deleveraging, Vedanta Resources as well, cutting the debt by half, it appears they're a little bit late in the game, but they stick to their guns that Vedanta Resources will ultimately default. We'll see how that goes. That said, what's the view on the stock? At around 440 rupees, would you advise buying into it? Because we have the demerger that's in the works, and the stock trades, as we've been mentioning, 4.5 to around 5 times on FY26 EBITDA itself.
So, Nigel, I'll leave that for the investors to figure out. But what we can say is that Vedanta stock is largely dependent on aluminum outlook.
Yes.
And the aluminum outlook has been pretty strong and doesn't look to be weakening anytime in future. They are also getting a little bit more of backward integration in form of bauxite mine, coal, their own captive alumina. So things are looking better only for them. So I don't think fundamentally there's any reason that performance would deter. But valuation-wise, I'll leave it for investors to judge.
Got it. And that aluminum business will be bulk of their SOTP. Cost savings are going to be there on bauxite as well as coal and alumina, which they'll be getting, from their for backward integration. So we'll have to see how that goes. But you're sounding fairly optimistic on the stock. What about the metals pack on the whole? Yes.
One last question, Rakesh. Hi, morning, Prashant here. Yeah. So many. Just to complete that loop on Vedanta before Nigel moves on to other areas. Is there like a trigger here for Vedanta, which so many people, HNIs, everybody owns the stock, right? I mean, the value that clearly is there, but is there like a tipping point which will sort of unleash gains here, Rakesh, as you think about it?
I don't think, this report really...
No, forget the report. I'm not talking about the report. I'm saying, is there this has come now, as you said, 2 years late. I'm saying, people have believed and bought this over the last 1.5, 2 years, the stock that is. I'm saying, is there a point where it starts to do well and starts to give returns?
No, so Vedanta has been has done phenomenally well, actually, in the last 2 to 3 years. Meaning, if you had asked me in 2021, I would not have been able to gauge this kind of turnaround that the management has been able to achieve. And things are only getting better from here. So meaning that inflection point happened 2 years back. And now we are into a steady growth state. So, I don't think there's any inflection point we are waiting for. Obviously, this demerger and everything...
Rakesh, my point is, stocks at 450, right? It was 450 in 2010 also. Now, you can add all the dividends, etc. That is the real meat here. Is that what you're referring to? Of course, I mean, in terms of balance sheet, etc., there's been a lot of repair. You said $10 billion down to about $4-5 billion in debt. But I'm talking about price appreciation, stock-wise.
Yeah, so see, what has changed is aluminum outlook. Aluminum used to, be loss-making for them, and they were hardly producing anything. They were not integrated, and aluminum was trading at around $1,600-$1,700 at that point in time. Now it is $2,600. So that $1,000 has changed the whole situation for them. They have such a large capacity, and they had all these issues with Lanjigar, etc. They were not able to integrate, reduce their cost, but now those issues are getting resolved. So I think we have come back to a point where things are looking really, really stable and strong from them from a fundamental point of view. So. Uh, Inflection has already happened, re-rating has happened, and now it is steady growth ahead.
Got it. All right. What about the Ferris pack? If you could tell us what is your top pick out there? Q1 could be a little bit subdued, but the remainder of the year is expected to pick up, right? If you're going to see a revival in construction and we have that safeguard duty in place as well. So what do you like from there?
So, Nigel, near-term outlook is okay for steel stocks because steel prices have gone up and raw material prices have gone down. So there would be quarter-on-quarter margin expansion for steel companies by around 3,000 rupees per ton. So that's a big thing for them. From a medium-term perspective, things are not very clear. It will depend on what China does. There are indications that they might, cut production, but we have to wait and see because one can't be really too sure about, China's policies. So I think near term is strong. Medium term, I think it is neutral at the moment for ferrous stocks.
Okay. All right, Rakesh, great conversation. Thank you very much. We'll leave it on that note for this morning. Thanks so much for joining in.